Hi there, welcome to this week midweek market analysis. So as usual, what we'll be doing over here is to go through some of these charts to share with you my analysis as well as the opinion on it. And if there's any opportunities, that's where we want to look out and keep a closer watch onto them. So let's start off with the dollar index over here. So from last Friday NFP, we did see a surprise from the unemployment rate, where the market actually expected a worse off data, but the actual one came in way better. And that kind of erases off a little bit of the recession fear that might happen within this year itself, and we kind of saw the dollar actually strengthen significantly. And from an Elliott Wave perspective, that is not really a surprise because we have been anticipating a reversal happening soon, and the catalyst that came in was the unemployment rate. So moving forward from here, after last Friday's move and of course earlier this week, we saw a very nice little impulsive push from the bottom at 100.80. So right now we're expecting a deeper retracement. So if I pull out a little bit, you can see from an Elliott Wave perspective, we may have that 5 wave down completed with the bottom around 100.80, and right now we are anticipating a push back to the upside. So if we can get a decent corrective retracement back towards the 50 and 618 zone around 102.40 and 102, which kind of gives us a very decent confluence of the previous high here as well, which was broken, that will give us an area that we can keep an eye for a potential buy with a target back towards the wave 4 structure around 105.60. Okay, so moving forward, at least for the remaining of this week, going into next week, we'll likely hold on to a bullish bias on the dollar itself. Now with that said, then of course euro dollar here is kind of inverse to that, and again from a bigger time frame perspective, bigger picture, we are seeing a 5 wave potentially completed, and around that peak at 1.1030, that may be the completion of the 5th wave, and right now we're expecting at least a decent 3 wave move to the downside. And of course, again on Friday we have that decent impulsive move to the downside, breaking the previous low too. And right now we're waiting for a decent pullback retracement. Okay, and this pullback needs to be in the corrective structure, which means it needs to go slow. Now there are key areas that you can keep an eye on. I think somewhere between 382 and 618, that zone will be crucial. Of course, we seldom use that 382, but right now we can see that 382 has a pretty decent confluence of the previous low here as well, which may have some reaction and the market may not retrace all the way back to 618. Okay, so essentially keep an eye on around this area between 1.0805 to somewhere between 1.0890. Okay, that will be a good area for a sell opportunity with a target back at the low of wave 4, which is going to put you around 1.0480. Okay, so that's the setup here. That is very, very clear from a structural point of view as well on the euro dollar. Now next up we have the pound dollar. Okay, pound dollar from a bigger picture perspective, we may be seeing the price development as a wave 4. Okay, so from here, from the previous low, we have our first wave up, second wave down, third wave up, and then this is developing as a wave 4 as a regular flat. At least that's the expectation right now. And if we start to zoom in a little bit, okay, within this wave 4 here, what we are seeing might be a 5-wave structure down to complete the wave C, which is a 1, 2, 3, and likely the market is developing a little bit of a wave 4 here, and the opportunity on pound dollar is a short-term one to the downside to kind of ride on the last wave down, right? Wave 5 within C itself. And the area to look out for will be around 1.2070 to 1.2140, and a target back at just the previous low around 1.1840. Okay. The invalidation level on pound dollar would be at 1.2265, which is the previous wave 1. And of course you need to then assess in terms of like your entry technique, the risk reward ratio, is it going to be worthwhile, right? Of course, if you're taking a trade around that 236 retracement and your stop is just above there, kind of give you just about 1:1 risk reward. You need to then assess if that's worthwhile. But of course, if you're able to wait for a retracement back to its straight 2 and your stops above there and your target below, That kind of give you close to 1:2, which may be attractive as well. Okay, of course, you need to then factor in like where are you going to put your stop, what is your trigger. That would then also impact your risk to reward ratio. Okay, so that's on the pound dollar side. And then on Aussie dollar over here, which is quite similar in terms of euro. Okay, we do have a 5-wave structure potentially completed 1, 2, 3, 4, and 5. And right now we are expecting a deeper pullback to the downside. Okay, and of course on NFP day on Friday last week, we again saw the Aussie dollar drop quite significantly, breaking that previous structure level as well. So right now we're anticipating a decent pullback towards that 50 and 618 zone. Ideally, this should come back down a little bit more and then before it goes back up. So this should be slow. And if you can get that, again, we have a nice confluence around there for a potential sell trade with a target, all the way back to its previous low around 6,630. Okay, so Aussie dollar, Euro dollar, Pound dollar, I think they're setting up pretty neat. In terms of the structure, wave structure is quite clear as well. Okay, then we have the dollar Canadian. Overall, dollar Canadian, I'm pretty neutral to perhaps slightly bearish anticipation of a slight drop to the downside. We do have the Canadian labor market data coming in on Friday, which again might give us some surprise, just like last Friday in the dollar itself. So that may push the dollar Canadian down. Now, from a larger time frame perspective, the price is still basically trading within this channel. And again, as long as it's still within this channel, it's not likely going to be very clear in the structure. So, if you're a bit more conservative, then my suggestion is to just leave this aside. Okay. Anyway, this structure that's developing over here is not the clearest. Okay. But we do anticipate a little bit more downside. Okay. So again, if you're aggressive, you can consider look for sell. If not, then just stay out of this particular environment first, right, in terms of dollar Canadian. Dollar yen, at the start of the week, we are a bit more of a neutral perspective because the market was testing the top of the channel and we want to see how the reaction is. From today's perspective here, it seems to be rejecting off that top, right? So this kind of tells us that there's a possibility that this may come back down and even retest the bottom before the push back up to give us that double bottom. So right now we're still maintaining a rather neutral perspective because this might turn out into maybe even a bigger flag structure that looks like this. So things are still not the clearest in terms of how the pattern is developing for now, so we'll just avoid the dollar yen for now, right? So dollar CAD and dollar yen kind of like neutral. Now in terms of gold, very clear structure that's developing as well. Long term, nothing has really changed. I think if you stretch your horizon in terms of like 6 months, 1 year, or even up to 2 years horizon, we're still very bullish on the precious metal space. But short term here, we're expecting a little bit more downside. Again, a healthy retracement is common. Okay, and we have this little structure here. Price came down impulsively, broke significant lows, and right now, if we can get a decent pullback correctively towards this area around trade 250 and 618, we might get a sell trade set up with a potential target back at the 50% level around 1790. Okay, so a 3-wave structure, and we can look to ride on the downside for now. Crude oil made a pretty strong bounce back up. Okay, so this one here, if you have any sell trade, you should ideally have been managing the position and get out with a profit. So right now we are just maintaining a neutral perspective after this little bounce, and we want to just see how the market is going to react from here. Okay, because crude oil, if I were to stretch out a little bit, it may start to bottom. Okay, soon. The question is just, are we going to get that break below that 70.30 before that retracement back up, or we might start to see it from here. Okay, again, things are not the clearest right now from what we are seeing, so just maintain a neutral perspective and stay out the oil market for now. Okay, S&P over here, the market seems to be supported above that bigger trend line after it has broken recently. Okay, so this is the daily channel trend line that was broken recently, and market seems to be supporting above it quite nicely for now. We definitely need a bit more time to have more confirmation, but this may ideally turn into a corrective structure like this. If it is, we can see more upside in terms of the S&P and perhaps in the equities market in general. Okay, but of course, give it time. Don't need to rush things through because this can still come back down. If that's the case, then we need to shift our bias a little bit. But for now, we are maintaining a neutral to slightly bullish angle. Okay, lastly here is BTC. Okay, so Bitcoin has broken off that crawl structure, break down the trend line over here. We had a decent retracement recently, retesting that trade 250% as well as the back of the trend line. So for now, we are still expecting a bit more downside. Okay, as a form of retracement, again a healthy one over here, because if you go to the daily, Bitcoin has been rallying for quite some days, okay, or even some period of time. Very nice rally. So again, a decent retracement is healthy, okay, and we can expect that retracement to come. So short term, potential sell opportunity, and then overall that might build up into a better buy setup for the longer run. Okay, so that's all for me for today's video over here. All the best to your trading, and I'll see you guys in the next one.